soy. Significa que ya no te voy a dar break. Sigue mirando así, sigue mirando.
Yo, yo, yo. How's everyone doing today? We'll wait for a little bit more people to join. Go through my bias and go through the execution, obviously. What I'm looking for. We'll wait for 15 and then we'll start it up. Let me take this off so it's not distracting. All right, we'll get to that. Don't worry. And if it gets stopped out, it gets stopped out. So, morning. How are you doing? All right, we got about 15, so we'll get it off. I mentioned into the daily bias stream. Bias was bullish. If you want to go in and read that, you can. In yesterday's market review, there's a very specific profile that we called for, which would be the consolidation or seek and destroy reversal profile. The exact screenshot was shared also. Oh, I actually may be able to find it. Maybe not though. If you go to month 7, actually, let me see if I can pull it up as we wait for a little more people to join. Core content, month 7.
All of the intra-week high.
This is what's called the seek and destroy profile for the week. And here it is right here. This is what we were referencing yesterday in the market review. Probabilities on this is low to neutral, as he says, and you have when to anticipate. When the market is awaiting interest rates, announcements, or non-farm payroll can create this profile in the summer months of July and August. Better to avoid these trading conditions. You can see, obviously, the kind of intra-week consolidation, and then you have this high-impactor news where we're going to continue up into, preferably into Friday, but we don't have a Friday trading week, and then we have this liquidity in the form of a premium array. So that was my expectation going into today for the bias. If you look at the higher time frame, we come down and swept the sell side here, and then coming to the pre-market, we'd swept the sell side here internally. There was also no inefficiencies between this point and this point, which if there was an inefficiency lined up with this bearish order block and we're traded into that, make me a little bit more hesitant to look immediately for longs at 930. Didn't have that. Sell side sweep here in terms of previous daily low, premium imbalance on the hourly chart here. You also could actually look for almost all of this as well, but I'm just trying to scalp it today and get away from it. Not really scalp. I guess it's a session move, so it's not a scalp. But that's what I was looking for. And I mentioned also in the daily bias that since yesterday for me was pretty difficult, today I just wanted to intently watch it to see how the opening range is going to play out. And we got a very nice opening range. So this is why I decided to stream right now. And then if you've been following along in the predictions chat, I've been kind of commenting on price action as we go. So we had a nice inversion fair value gap that was traded through. Going into 930, order block started to hold, which was nice. we had on the 1 minute chart this minor buy side liquidity. Why is this the buy side I'm picking? Because that's the minor buy side, the current session high between the times of 7 to 10 a.m. Right? So right in there, and also you can see your value gap here lining up with this very nicely. If you know what that is, silver bullet. Also, what time is it? So that's a minor buy side pull. So I want to see it climb and close above. If it starts to wick this out and then drop back down, I don't like to see that. And then I said, notice it reacting to the minor buy side here, a child dealing range right here. So notice it reacting to the minor buy side here, a child dealing range discount is all it should need. OB plus the IFEG should not be closed past. So when it tags this minor buy side, it's going to look for it's going to look for discount because that's a premium array. What discount is it going to look for? Well, preferably it's going to look for a child dealing range, meaning it should not go from this dealing range to this dealing range. It shouldn't drop all the way and take out these lows or like OTE of that range. Rather, it should look for a continuation discount. So when it starts right here, it's going to look previously at what's the most recent dealing range. There to there would work. You could also use this to this. Both of those would work. Okay, so as it's dropping back down into that, it's going to look for a discount PD range. You have a bullish order block there. You have a very tiny inefficiency there. And you also have the IFEG. So that's why I was saying, okay, it should not close past the OB and the IFEG. And then in here, there was a balanced price range. Very, very good indication of strength. If it's able to close past balanced price range. Why is that a good indication of strength? Because of the fact that it is normally used as the high quality, low risk sell in a market maker sell model, meaning that should be a very strong bearish PD array if it's going to react up into that after a minor buy side pull and drop back down. If it's able to close through it, an instant closure through is a great strength indicator on a lower time frame tape read. Soon as we close through, what's this next candle doing? Boom, flies up. It's not random. It's not cherry picked. It's called beforehand and immediately does exactly what it's supposed to be doing. So there's individual PD arrays that when you see these candles print, and this works on almost any time frame as well, right? I'm comfortable with the 1 minute, so that's what I trade on. That's going to give you an indication that, okay, it's likely to continue up. So when I see that closure through, that's why I'm starting to stream up instantly, because at that point, I'm pretty confident I know where the session is going to go, and we're going to have a nice continuation going into 10:30, preferably. New week opening gap is still my draw, as we can get a bounce or a consolidation off of that, and I don't want to be gambling with take profits right before NFP because I don't really know what's going to happen. Although I do like it for it to really actually go all the way up for the current weekly high, all the way up here. That's my current weekly target actually, for obviously the fact that we're at all-time highs. And then I'm going long into 9:30. Why do I feel comfortable doing that? You have a nice manipulation leg here, low, high, lower, low, tagging into the sell-side liquidity from yesterday. So this would be your last manipulation leg. You project that up to -2, -2.5 into there, the new week opening gap, and actually -4 and -4.5 puts you on the AM session high from the previous day. So super nice. And then I'm expecting 9:30 to manipulate because we have SMT at these lows. Or sorry, 9:30 to expand because we had SMT at these lows. We already manipulated. 9:30 is a function of time. That's always going to be there. It's going to have normally two purposes, either to manipulate or to expand. If I already believe we've manipulate, why would we manipulate again? Likely not to happen, especially if I see that SMT there. Well, then I know between, where's 9:30? In here, and then coming into it over here, 9:26. That's what I'm using as a framework. And I could say I got lucky because the fact that YM is dropping here and ES is consolidating. But yesterday we got unlucky. The fact that NASDAQ was the only one not really to move upwards at all and decides to drop back down. So these kind of conditions, you're not going to be able to use correlated assets to say direction. And really SMT is also going to be pretty hard in these kind of conditions as well, just because of the fact that you no longer have high quality SMT because they're uncorrelated anymore. So I'm going to be mindful of that. But when you have a strong bias, PD array should hold regardless. And coming into 9:30 on the NASDAQ chart specifically, I was pretty comfortable looking for 930 to expand. And then we can pull up the executions here. I'll show you what I was looking for. So going long, going to 930 off the order block, off the IFG, and then one more as it's crossing through this order block here off the balanced price range off of a stop limit order. And then I've got my limits on the new week opening gap, and then one up at the London high, and then one up at the current daily high. And I really just wanted to tag new week opening gap, and anything past that is extra. I was debating on whether or not to full pull it at new week opening gap, but I think going into tomorrow, like I said, if that previous weekly high is in fact the target, then I'd like it to extend a little bit further up today. That's fine. So I know the most recent SMT we had was pre-market at the lows, but overnight at London we had an SMT at the all-time highs. So I wasn't able to long. Can you tell me why you did? Just using the weekly profile as well as the higher time frame PDRs. You can't, like I said, in the SMT in the consolidation range is going to be much harder to use. Look at the past couple of weeks, where you're not going to have a lot of SMT at the highs and lows to dictate where the day or the session is going, and rather you have to use strict higher time frame bias and the weekly / daily kind of reasoning to see why you're looking for longs. So I'm not going to say looking for shorts is wrong, but my bias was different than yours. So there's if you got bias was short, you probably had a reasonable explanation for that, and I'm not going to say it's wrong. So I can give a full explanation as to what my bias was. I gave it in the beginning of this, and this is all recorded. So if you want to go back in and watch it, you can, but we'll probably do a market review today as well. And I'll cover it top down fully as we're watching it. But right in here, nice liquidity pool being swept coming into the inefficiency plus the bullish order block there, plus the -1 plus -1.5 plus the macro time. Nice total soup opportunity, intra move. This is a little bit too high in premium for me to take a continuation off of, so I just want to see it play out. Thank you. My reasoning was the London manipulation, New York session expansion. Yeah, this is exactly why these conditions are hard. You look at this and you look at this pattern, profile wise, if you were to pattern profiling, looks the same, right? That's why we can't be doing that. There has to be a logic with it. The logic in this case is the fact that the weekly profile is going to be a seek and destroy bullish profile. It's my expectation for it. So every single individual sell stop will create a move back up. And depending on where we are, obviously at a key time like this, 8:45, tagging that sell side immediately, you got to look for at least some sort of premium array. That first one would have been the buy side at 7:30. It closes past that, then you could probably look to flip bias a little bit more confidently if you were bearish at the beginning, right? I think if you were to see this right here, I'd be a little bit more confident in flipping bias, but it very well may drop all the way back down and take out the lows. I got no, I'm not placing any weight on it as well, but my expectation is maybe opening gap at least. You don't have any 10 a.m. news today. It was just 9:30 is volatility injection. We had a 8:15 news or something. Yeah, 8:15 news. You can see that starting the manipulation back down into the range. And also the reason as to why I'm just looking for new week opening gap. day before NFP, right? Thursday before NFP normally is the hardest day of the month on paper. So it being a Thursday NFP, Wednesday the day before, I don't really know what the rules are. This is the first time I've actually had to engage this kind of condition. So that's why I'm learning. I'm being cautious because to me, first time I've actually experienced this kind of week in the past 4 years. I've never seen NFP on a Thursday, and then the hack I have this kind of Powell on a Tuesday and all this other stuff. So I'm taking it very slow and just trying to learn this week. What the heck just happened? Why did my limit orders just cancel? Hello? What the heck? What in the world? I'm what? I guess you speak things into existence, huh? First time I had to deal with that too. What the heck was that? Why did they just cancel my limit orders? Huh. That is the weirdest thing. It didn't even cancel my trade, it just canceled the limits instantaneously. TradingView demo was weird. God's plan. Nice touch on the OB too. Perfect. Oh. So when it takes out this high right here, you want to see speed through this. Okay, it should preferably not touch this order block anymore. If it were to take out this high, and I'll really close above it. But even if it wicks out that high, ticks it out, that order block preferably should be not reclaimed. Okay, you can reclaim an order block as many times as you want until it takes out the retracement high. Boom, right when that happens, this order block should not be reclaimed anymore, and it should start to speed through. So you don't want this to see not reclaimed anymore in the best case scenario. And since the bullish price action has been holding so far, I would expect this to hold just like everything else has been. That Bad Bunny album is fantastic. If anyone has listened to the, it's not really latest, but the one he put out a couple months ago. Fantastic. Beautiful. Five minutes is obviously looking healthy. That's why I've not pulled it up right now. Order blocks and efficiencies all being used pretty well, so I was not really stalking it too much. So there you should see the speed now. Unless there's a gap, am I missing? Yeah, we're good. Bad Bunny. There you go. See, look at that. Nice, quick, energetic move. Killing it. Dr. Barber as usual. Is there a 1 hour gap here? Am I wrong? Oh, yeah, you're right. Yeah. Just got to get up a little bit more into the new week opening gap, which it should. I don't think it's going to drop right here. Nah, that's W Dr. Barber right there. All right, here comes TP1. Maybe not. Doesn't want to get up there. Let's do it on the 15 second. Let's reach out this really quick. But time of day is looking nice, right? You've got 9:30 to 10 forming the low expected, and then potentially 10:30 to 11 forming the high there. And the low here is formed at 8:43, so you actually would want to see it further than 10:30. About 2 hours passed. Here's the first limit. Thank you very much. Now we're looking for up here. Is that 50K? Close to it. We're going to reset the account once we have 50K. So 10:30 is over here. Is our first draw on time. But yesterday's market review, if you've not seen that already, extremely useful. I think it was one of those ones where it was new price action to me. So I haven't had that kind of experience in, it feels like a year, where like I've come to a day and actually had to look for things. I think you don't have to be a crazy market wizard or whatever to be like, yeah, I understand what's going on. And I think as a student of ICT, the point when you make it and you can understand it technically is when you can come onto each and individual day and come in with logic that you use from Monday through Friday and be able to explain to yourself what happened on that day and how you can learn from it, right? That's what we're all looking for. So once you develop that approach, there's going to be a lot of different distinctions that are made within the marketplace. And as you find, a lot of them are similar. They all follow the same things. And even on a day like yesterday for me, which I found to be quite difficult, it still follows those same things. And that's what you have to have, these objective market truths, meaning a set of list that no matter the day, no matter the news, no matter whatever it is, price action will follow or showcase those elements. Otherwise, you're going to be left with subjective price action, meaning, oh, today this happened. It was this, and I should have used this. And then on the next day on Tuesday, because we had 10 a.m. news, I should have used this. Oh, and here's the new week opening gap from 4 weeks ago and the first presentation gap from last Friday that it tagged into. I should have seen that. To me, that's more subjective than objective. I want to use things that are there all the time, and then based off of those market truths, be able to build every other aspect of my model and of my trades. So down to my bias, down to my trades, they all have to be following the same objective market truths that are always going to be there, right? And those ones I mentioned in the stream yesterday. If you haven't watched that, I suggest you go in. Like I said, I'll write up here as well. These are things that you know are always true, which would be open, low, high, close, open, high, low, close. That's always going to be how the session, the day, the week, the candle prints. You know that to be a truth, objective truth. Number 2, market maker models. Price action only moves in a market maker model. Number 2, price action always moves from internal range liquidity to external range liquidity and vice versa, right? We also know that time is very important. Everything is timed from the entry to the exit to when we manipulate to when we expand. The fifth one will be the stages of price delivery. There's only 4 stages: expansion, retracement, reversal, consolidation. We know these all 4 to be true every single time. That way, when I come into a day that's new, or when we find some price action that's new, or even when it's not new, a review, any sort of analysis on the marketplace, it all needs to be fitting into here. So I can look at the session at how was the session forming into this? How was the session looking at this? How was the session doing this? How was the session timed? How was the session forming the stages of price delivery? Then you can go back and bump it up a week or to a day and to a week. And you can see all those things fractally happening. And then you have a good explanation of price. Then if you were to look at, oh, here's an entry off of a fair value gap plus an order block, that fits within the market maker model. And it should also fit within a stage of price delivery. It also should fit within a stage of time. It also should fit obviously within these 2, but more you're selecting these 3, right? Macro entry today, beautiful example. Time of day, right? Even the macro time. You've got inefficiency plus an order block lined up with the market maker model silver bullet area. You got price, you got session movement, you got all these things lining up, and then now you have a good, you have to anchor them to something, right? You can't say, oh, here I'm using this because I want to, or because that's what's present, when it's not anchored on any sort of objective truth. That's why you'll find yourself, and I've been guilty of this as well, where you go to Twitter and you look for this model and this model and this shiny object syndrome and this whatever's everyone's showcasing, instead of finding what's something that's always true, and then everything else you can just build on, right? Like these entries here are almost on whatever I feel like it, just simply because of where I believe the draw to be and where I believe we are in the market maker model. It doesn't have to be on some exact level. I prefer if it is, and that way I can get a better stop placement. I mean, this trade itself was not, stop placement was down to here, 928. So the stop, this is probably still a 5-hour trade or a 6-hour trade. But the PDRs itself, that's why I say entries don't matter. Because if you understand the bias, if you understand everything else around the session, the entries are, it doesn't matter really what PDR you want to use, because they all should be holding towards the draw. Of course, it does matter to some extent. I'm not going to say that, but every single one of these is an entry, right? And you can always come in here and logically explain it. You got immediate rebalance here. You got an order block being touched and reacting off the IFEG there. You got a balanced price range being closed through and have a stop limit on the SysD there. That's why we're getting filled right above that. Exit off here, exit off of this one, and I actually may push this last limit till we get filled out at 1030. If it gets too close to this, I'll push it up higher, which I don't even know where I would push it to. And you got the order block here. And I guess it'd be just to here, up to there, with the next one. So I'm gonna monitor it, obviously, see where we want to go, and I'll be taking it towards 10:30 to 11 o'clock whenever we form that new session high, as we're drawing up to the AM session high, hopefully, and especially if we can get a closure through this -2, -2.5, easy. You put on that. That should be an intermediate term low on the 5-minute now. Well, it's not yet, but it should be in the future. 1 minute's already an intermediate term low. And we already said that this order block should not be reclaimed anymore, so yeah, decent stop placement, I think. That'd be a point of invalidation for me. If it takes out that low, I don't really want to be in the trade anymore. I love it, Trader Funded. Good work today. Thank you so much. So also look at new week opening gap. That's a PD array. I've said in the past, I don't really like to use new week opening gaps and new day opening gaps or opening range gaps, and I stand by that. The only one that I'll use is the current week. The current new week opening gap, to me, has weight to it. So do the other ones, but they're a little bit too subjective for me. To the point where it's much harder to say, oh, here we're drawing up into 4 weeks ago new week opening gap, but then why do we select that one? It's a form of an IRL, sure. And maybe I just haven't studied it enough, which is completely true. I've not spent a lot of time in new day opening gaps and new week opening gaps or event horizons. I think I studied event horizons for like 2 weeks, and that was it. So I don't really understand it enough to use it in my model. And I found I don't really need them either. So I'll use the current one, and that's it. And the new week opening gap being used as a draw is fractal for consolidation profiles. If we're consolidating on a daily time frame, if I'm saying within the range of midnight to 1600, if we're consolidating, what would be the draw on liquidity that's constantly tagged and used from that range? Midnight open. Midnight open becomes that thing that's going to be tagged multiple times. What would be on the session perspective, 9:30 or 8:30? Then obviously as you go further up, then the weekly open becomes that. Because what we're doing is, a consolidation candle will be printing like this. It's not going to print like this, right? It's going to come back and eventually just keep. So you look at the open as almost this dynamic draw where it's going to keep tagging into it, bouncing off. And if you look back at over here, the consolidation weeks that we had in here, this mess, look back at the new week opening gaps in here and see how many times it wants to tag and come back and touch it over and over and over again. And even a day like Monday this week, I believe you can kind of see almost that hovering around the new week opening, the midnight opening price, and obviously the candle that we closed as a result. But I mean, look how good this looks. Nice market structure shift above there. To me, that previous weekly high would be the draw for this week. I'm gonna put that in daily bias for now. But so yeah, I'm gonna push this last one up to here just as temporary, and I'm gonna pulling it off when it hits 10:30. As long as the 5-minute order flow, if anytime I'm holding runners, 5-minute order flow is gonna be what I use. I don't stop place on the 1 minute to hold runners. I don't stop place on yeah, to me, it's there's too many 1-minute stop runs and 1-minute IFEGs that are just formed within the range that you can't. It's much harder to do that. Same thing like on a 15-second chart. I'm not going to go in and stop trim on a 15-second chart because every single swing low and in every single intermediate term low is not going to hold on a 15-second chart. So I use the 5-minute if I'm going to hold runners and things like that. Same thing with the 5-minute order flow. Got stopped out because of a tight stop loss. Journal, did my protocols. Going to the gym right now. Have a blessed day, y'all. Flux one shot, one trade. Exposed a lot of mistakes. Didn't know them before. The last 2 months, I tried it. With the risk management and proper execution, just trade it. I am convicted and now I'm funded already up. And today's loss is data and an opportunity to learn. I love it. Beautiful. Go work, my man. Enjoy the gym. But I love to hear that stuff. It does, right? Because it forces you to take only high conviction trades, and then it forces you to deal with the outcome. And it forces you almost to manage your risk. Because if you know, okay, if I take this loss, but then when you really look at it, right, if you're dropping your risk, all you need is a 2R. And maybe for some of you that's scary, is, oh, that's a 2R. That's like my average trade is like a 2R. It's super easy to push that R if you study your model. You'll find refined entries, you'll find more refined exits. And there's 2 ways to trim that trade. This way, and this way, both of which extend your risk to reward. I don't ever trade a risk to reward just to trade risk to reward, but I'm saying when you manage your risk properly, you take a trade that's a loser, it's super easy to get out. 2 trades, 3 trades, 4 trades that are losers, it's super easy to get out if you just manage your risk properly and take good trades. Sometimes we worry too much about getting out of drawdown than actually doing what we need to be doing, which is you take each individual day as its own. I said yesterday, as we closed off the stream, took a loss. All right, I'm going to go journal. I'm not going to touch it the rest of the day. I manage my risk on that day. And then tomorrow I'll have the strength and energy to come into it. If there's a trade, there's a trade. If there's no trade, there's no trade. But I'm going to manage my risk on that day as well. So come in today, same exact model that I'm looking for, same exact price action. And my job here is basically done already, but I got to go journal. I got to do all those things. And it's another day off the board. I don't got to worry about tomorrow. I don't got to worry about yesterday. It's just focusing on the present. To me, has helped the most when thinking about managing risk. And the second thing would be being very self-aware, right? All those thought impulses we have about trading randomly or breaking our rules. The more that you dwell on that thought, the more energy you feed it, the more opportunity it has to affect your action. As soon as you think that, you got to watch it and then kill it, let it pass, and start to flood your brain with positive emotions such as injecting logic, right? As soon as you feel the need to over leverage or over trade or do something out of the blue, you have to obviously, number one, be aware enough to monitor that. And then number two is have some sort of injecting logic that you can flood in and convert that almost negative thoughts and negative energy from those thoughts into something positive. And that will, it's a snowball effect, right? Anytime you've had something like a bad thing happen in your day, it almost seems like everything else starts happening bad, and then you have a bad day. When you have a good day, it seems like everything snowballs. So what you can do is you actually can control that to some sense because you place meaning to everything, right? Me taking a loss, or whatever it is, right? So someone saying something to you, you place the meaning to that. Has no meaning. Word has no effect. But yet you place the meaning and then can develop these emotions and feelings towards that other person just because they might have said something that they may not even meant. So the same thing you have to do with trading is you're constantly at war with your mind at the beginning. And the way that you defeat that is by almost flooding your brain constantly with this injecting logic and monitoring and killing the negative emotions as they pop up. So then your brain almost says, okay, it's almost harder to create negative emotions in this kind of scenario and overtrade and over leverage and do stupid things than it would be just to simply manage my risk. And some of that is rooted in fear. If you've never gotten out of drawdown, you take a 1 trade or 2 trades and then immediately you start to overtrade and over leverage every single time, you're going to even fear it more that you're in drawdown because of the fact that you've never gotten out. So then you want to overtrade and over leverage to get out. But then you've never actually experienced the feeling of properly managing your risk, taking a loss, taking another loss, and then the next day you manage your risk again, and then you're back to your equity high just because you took a good trade. That feeling alone is probably one of the best feelings in trading to me. Winning is nice and losing is nice, but to me, I think the best feeling in trading is when you take a loser, a couple of losers maybe in a row, and then with one good trade, you're almost wiped out that entire losing range, and you're almost back to equity high, or maybe you're past equity high and then some. Best feeling because you're like, I did my job, I managed my trades, I managed my emotions, and now look where it's gotten me. And it's something that you can look back at because in the beginning you probably didn't do that. And then you can come and be like, look at the difference between what I was fearing and what actually happened. There was nothing to fear in the first place. It was just all an illusion. So I'm yapping a lot, but price action is just continuously moving up. So I'm not really too bothered by it. We're just kind of slow grinding up. So as long as it keeps showing me 1 minute strength and 5 minute strength for that matter, I got no fear too much about where price action is going to go. 1030 is right here. You can see we're about 5 minutes away. And that is the 1030 in this case is like the low hanging fruit. We'll just call it LHF so it's not cluttering the bottom of the chart. That's the low-hanging fruit. Meaning, at a minimum, anytime the session is expanding, 1030 is where it should go, assuming it's not a swing to Z day. Based on where this low is here, would you expect it to just expand for 2 hours and then be done? If it's actually a New York Open reversal profile, probably not. So you wanted to expand it even further. So nice little spike there, and it didn't fill me out. It's great. Thank you. What the heck was that, man? And then back to the 5-minute. Couple ticks below the main threshold of the order block. And look at it. It's already 4 minutes before, so I can take a partial here off whatever the high is formed going into 1030. I think I'm actually going to leave it up here at the high for the rest of the day, because I do think we're likely to go back up there. So there's the execution. I'll screenshot this for now. If you want to say, I don't like that. I'm going to take this off. I don't like that. There we go. So I'll put this in predictions chat, and then when the whole trade is finished, I'll put it into the stream trades. The interim concept. Yep, exactly. Can't join the stage, unfortunately. I may be wrong, but I thought this was a very clear second stage reaccumulation of the market maker buy model. So just after the gap getting tapped. Yeah. Yeah, it looks good to me. Where is that? Actually, what time is that? Is that ES? Looks like ES. Bus picked me up again. I am, yeah. 12 o'clock. Yeah, I think, Creed, I think we're actually going to go all the way up to here as a weekly target for the consolidation reversal profile. Yup, what up, Slender? Don't call me that. You need a band. Textbook macro trade, eh? Did you take it? Yes, sir. Shout out ATM, man. Bread and butter. Good stuff, Dr. Barber. Yeah, great. Win, loss, no trade. Hopefully you guys followed the process. That's all that really matters. I know that the flashy P&L and the trades or whatever are great, but what did I do differently from yesterday? Really nothing in my mind. Welcome for the help today. But yeah, I mean, I'm just looking at the 5-minute and the 1-minute chart. Strength is there. So you got -4, -4.5. We already closed through this one. So this becomes the short-term terminus, and this also lines up perfectly with the AM session high there. It's a nice ERL target. Which should be right there. Got that stacked, juicy stacked liquidity pools. Right in there. And you actually, I'm tempted to push it all the way up to this high and just call it a day. I mean, it is a demo, so like, I'm close to it. We'll have to see. Yeah. Yeah. Let's not get greedy. Let's not get greedy. Let me. It is a demo, but one shot, one kill on a consolidation reversal week just seems like I'm gonna get. Shout out Aiden Ross, man. All right, so 10:30 on the dot. There's your new high. Bang. So could close this out too if I wanted to, but I'm just gonna leave this run and be done for the day. And obviously, when it gets filled out, I'll put some alerts here, and I'll leave it there. And that's that. So a little bit of a later stream, like I said, just to get my mind right watching it. I need to focus on these kind of price action days. So as it starts to just become easier, I'll boot the stream up. Leaving runner to get filled out and be done for the day. So this will be posted up later. The YouTube vid section as usual, and hopefully you guys learned something from the tape reading. All these tape readings, PD arrays, I didn't really go through them a lot, but all very, very useful. The main one I want you to take away, if most of this is pretty common knowledge, the main one being the balanced price range here. I said in the predictions chat, if you missed it in the beginning, that was a very useful PD array to be watching, as it's a 1 minute, especially if you watch the 1 minute, a good strength indicator. Okay, here's a balanced price range. An instant closure is a great strength indicator on a lower time frame tape read, as it normally is used as a high quality, low risk sell in a market maker sell model. So as soon as we got that closure above, boop, we got this shoot up. All right, and you wanted to see that minor buy side being closed above too. That's number one I want you to study. Number two is this reclaimed order block. You can touch the order block as many times as you want until we take out the retracement high. So whatever high started the retracement, that cannot be violated. As soon as that's taken out, doesn't have to close above, doesn't have to do anything. As soon as it's taken out by a tick, that order block should no longer be reclaimed. And if you were in the stream, you saw that market out live. So even if it wants to come back and actually approach the order block and touch it, you can actually use that as a stop loss placement, because it's violating a very strong order flow. Because what would you see this as? Potentially a propulsion block. That should be a propulsion block. So actually, the main threshold of it shouldn't be tagged, and that's almost the breakaway gaps of order blocks. So this one here, I want you to watch that PD array, and then the reclaimed order block as well. The rules regarding that, two very useful 1 minute tape reading kind of tools, and then everything else I think is pretty standard. IFEG over here, nice closure. Nice, 1 minute inefficiency with the order block there, and then obviously the silver bullet, -1 to -1.5, banging it out right there during the macro time. And actually, if you wanted to extend this all the way, puts you quite high up. Right? So anyways, like I said, I'll post this up later today, and you'll probably see that TP filled. I'm not going to keep trimming my stop. Just leave it there and set it and forget. Shout out Alex. And we'll be done. All right. So we'll be streaming again tomorrow. I don't know. It'll probably be the same protocol. I don't really want to be getting in a NFP day if it's all funky. But we'll see. It'll be a 50-50. Hopefully, though, yeah. And then mark review probably later today. Normally choppy, I don't know. I'll have to see. I mean, pre-NFP, yes. So like from now on, like from lunch onwards, I don't really want to be in a trade. Pre-NFP. And then What was I gonna say? Post NFP, like after 9:30, normally it's pretty good. So we'll have to see. But I'm not worried about tomorrow. I'm worried about today. I'm gonna go in a journal, and then I can get on some good old Rainbow Six Siege, win some games there, and carry on with my day. So take care, and I'll see you guys in the next one. Peace. Rocket League, real. I see you. You know ball.